Hello students, how are you all? I hope you are doing well. Welcome back to our channel after a long break. Now, in this video, I am going to discuss CMA Intermediate Paper 2 Financial Accounting Insurance claims for loss of stock and loss of profit. This is one of the important, not only important, very important chapter from examination point of view. Without a question from this chapter, you cannot find a question. Sir, how, sir? Now, here you can observe, based on the previous four attempts, that is from December 2023, December 2023, June 2024, December 2024, and June 2025. Observe, from this chapter, in every attempt, they are asking a question for 7 marks under 6B and 3A. Is it clear, students? So this chapter is very important from examination of you. Right. Now look at, just we observe here, insurance claim for loss of stock is the first aspect which we cover, and loss of profit, this is the second aspect which we cover. So our insurance claim consists of two individual concepts. One is loss of stock and another one is loss of profit. Sir, which one is important, sir? Both concepts are important. How can you say that, sir? Observe. Now I am going to show you December 2023 question paper. This is December 2023 question paper. In December 2023 question paper, they have asked a question on insurance claims, that is loss of stock. Loss of stock. Next, look at, this is June 2024. Sorry, this is also December. This is also December 20. Now look at, this is June 2024. June 2024. Again, they have asked a question from insurance claim, that is loss of profit. Next, this is December 2024 question paper. December 2024 question paper. Look at, again, question from insurance claim, that is loss of stock again. June 2025, they have also asked a question on loss of stock. You can go and observe it. 3A, question number 3A. Out of 4 attempts, 3 attempts, from 3 attempts, we have got a question from loss of stock. In one attempt, we have got a question from loss of profit. But both concepts are very important. Out of them, loss of stock is very important. Maybe next attempt, we may get a question from loss of profit. And we cannot say. So what is there in our hands? Just to prepare for the exam. That's it. Clear, students? Now look at, without wasting much time, here we try to understand the concept of insurance claim for loss of stock and loss of profit. Here most of the students, they get some little bit confusion in applying the concept of loss of stock and loss of profit. Loss of profit, it's a sequence of steps. But loss of stock, here you need to understand the concept. Loss of stock, why we are calculating and how we are calculating, that we need to understand with basic knowledge. Is it clear, students? So after watching this video, so I hope that you will clarify all your doubts from this chapter, insurance claims for loss of stock and loss of profit. Right. Now observe carefully. Here, let us say for example, Mr. B started a business of buying and selling of goods. Now he has opened a business in the name of Bala and Co. Now he is dealing with goods now. So some of the goods he may keep in the showroom or shop, whatever it may be, and some of the goods he may keep in godown or warehouse, whatever it may be. Suppose for shop or warehouse or godown, anything happened due to fire accident or any short circuit, if anything happened now, then we lost our stock. If the fire accident happens in the showroom or shop, in addition to the loss of stock, there might be some additional loss. What are those additional losses, we'll discuss later. But when the stock lost in godown now, then we can say that only stock is lost. Loss of stock. So here there are two things. One is loss of stock. Another one is loss of profit. What is this loss of stock and loss of profit, sir? If goods were lost due to fire accident in the godown or shop, we can say it loss of stock. If fire occurred in the place of shop now, then what happens? The building may be destroyed due to fire. The building may be destroyed due to fire. In that case, we temporarily shut down our business. We temporarily shut down our business. Some businesses may permanently shut down. Some businesses may permanently shut down. So, if a fire, the building got fire accident, then there are two possibilities. One, we can permanently close our business, and second, we can temporarily close our business. If business is permanently closed now, we can say that it is business is dissolved. Business is dissolved. But if the business is temporarily shut down for the renewal or renovation of the building to restore the building, then we call it as temporarily we shut down the business operation. Shut down the business operation for a temporary purpose, that may be for example 3 to 6 months or 9 months or 12 months or whatever it may be. What we lost? Loss of profit. Loss of profit, because there is no business operation, there is no turnover. If there is no turnover, there is a loss of profit now. This is called loss of profit, or it may also be called as consequential loss. Consequential loss. There some fire occurred in the business premises. In addition to the loss of stock, I repeat, in addition to the loss of stock, there might be some loss of profit also. Why? Because temporarily we shut down our business. Only stock lost now, then we go to the market and again we will buy the goods and we try to sell them. But if the business premises got fire accident, then compulsorily we have to shut down the business for a temporary period of 3 to that range from business to business. If the business is shut down for a temporary period of months, 3 months, 12 months, 18 months, whatever it may be, then he may lose the turnover now, because it is not possible to sell goods. It is not possible to sell goods. When it is not possible to sell goods, then it is not possible to generate revenue, turnover. When it is not possible to generate turnover, how it is possible to get profit? That case, we can say that it is loss of profit. Whether it may be loss of stock or loss of profit, what will do? The business generally will take a fire insurance policy. The business generally may take fire insurance policy to cover this risk of loss of stock and loss of profit. For this purpose, the business will pay some premium amounts to the insurance company. Insurer. Okay, and we take the policy for a fixed amount, for certain amount. For this, suppose 10 lakhs policy, 10 lakhs policy for loss of stock, and let us say for example 50 lakh policy for loss of profit. 50 lakh policy for loss of profit, 10 lakh policy for loss of stock, and 50 lakh policy for loss of profit. For this, we have to pay, company will pay insurance premium now, and whatever the insurance premium company will pay, that is treated as expense and it is debited to P&L account. We are not going to discuss what is the accounting for payment of premium. No, we are going to discuss how to ascertain this loss of stock, how much stock lost, and for how much amount we apply for the claim to the insurance. And here, how much profit is lost due to this fire accident, how much profit lost, and how much company or how much amount you are expecting from insurance company. Sir, no students. Two concepts we are going to discuss here. First, we discuss about loss of stock, then we discuss about loss of profit. Is it clear, students? Yes, sir. Now come to first loss of stock. So two things now, loss of stock and loss of profit. Now loss of stock. For example, we are in the financial year 2024-25. Fire may happen at any point of time now. Fire may happen at any point of time during the financial year. So we are taking for example financial year 2024-25. Financial year 2024-25. Let us say the fire occurred on 15/10/2025. 15/10/2025. Now the question comes, for how much amount we lodge the claim? For how much amount we lodge the claim to the insurance against the insurance company? For how much amount we lodge a claim to the insurance company? Question mark. Question mark. For that, we have to do some basic workings. For that, we have to do some basic workings. What are those workings, sir? First, first we try to calculate how much stock lost. How much stock lost? That we need to calculate as on the date of fire. See, this is the date of fire. As on this date, first of all, how much stock we have in the premises? I repeat, as on 15/10/2025, how much stock we have in the premises? That's the first calculation. Second, out of this stock, how much stock we salvaged? How much stock we salvaged? Then we get the net amount of stock lost. Net amount of stock lost. Third step, we calculate amount of claim. Amount of claim. These are the three steps which we follow. First step, tell me, we try to calculate how much stock we have in the premises as on the date of fire. How much stock lost, how much stock is there in the premises as on the date of fire. First step. Second step, out of this stock, how much stock salvaged? How much stock salvaged? Third step, we calculate amount of claim. You can calculate these three steps now, then loss of stock is over. But this is not that much of easy to get now. To get. First, we try to calculate how much stock lost. How much stock lost? Suppose if we are maintaining books of accounts now, generally in your cost accounting, if you observe material cost, there we maintain books of stock ledger now, sorry, stores ledger, inventory ledger, whatever it may be. We have two methods of recording inventory now. One is perpetual inventory system, another one is periodic inventory system. We are maintaining perpetual inventory system, then at any point of time we can calculate how much stock left in the godown or premises, whatever it may be. Yes or no? By looking at the stores ledger or inventory ledger, we can ascertain as on the date of fire how much stock is there in the godown. As per books, physically is it there or not, we don't know. But as per book, this much of stock we should have in the godown. That is stock. As per books. Suppose here the concept comes when the books were lost. Nowadays you cannot find that situation. Why? Because nowadays every businessman is maintaining books of accounts in clouds. Na? You can access that data. As on the date of fire, how much stock lost, you can easily access. But to test the student in the examination, they don't give you any books of accounts because we need to calculate how much stock is there on the date of fire by applying some techniques. By applying some techniques, practically how they calculate, that is another situation. But here, for exam's sake, how students can able to calculate the stock as on the date of fire. Second, how much stock salvage, this is given in the problem itself. Amount of claim we need to calculate. This we need to calculate. This also we need to calculate. First step and third step. Second step they give you in the exam. Now the concept comes, how much stock we have as on the date of fire. Whatever the stock we have as on this date of fire, we can call it as closing stock. Whatever the stock left as on this, generally closing stock means what? Unsold stock, the end of the year or at the time of closing the books of accounts, whatever the stock left in the godown or stores, premises, whatever it may be, entire business, we call it as closing stock. Here what we are calling, as on the date of fire, as on the date of fire, whatever the stock I have, I am calling it as closing stock. I am calling it as closing stock, unsold na. Yes sir. Now the concept comes, how do we calculate this closing? Generally, to calculate closing stock, I told you already, if you are maintaining perpetual inventory record system, you can refer that inventory ledger and you can ascertain the total amount of stock as on the date of fire. But now the concept comes, when it comes to examination, it is not possible to verify that it stores inventory na, or inventory ledger na. That's why we apply the indirect methods. We apply the indirect methods. Direct method is what? Referring the books of accounts. That's it. Referring the inventory books. But here we are following indirect method. Indirect method. Sir, indirect method means what, sir? Now, generally to calculate closing stock, what is the formula we have? Sir, we have COGS formula, sir. COGS, cost of goods sold. Cost of goods sold. Cost of goods sold is equal to opening stock plus purchases plus direct expense plus closing stock. Na? From this example, from this uh, formula, we can calculate closing stock. Closing stock. The closing stock is nothing but opening stock plus purchase plus direct expense minus cost of goods sold. Then how much is the cost of goods sold? The cost of goods sold above is we have formula, sir, equation. But the above equation cannot be directly applied here. Why? Because to calculate cost of goods sold, we need closing stock now. Not possible. So the other formula we have for cost of goods sold is sales minus gross profit. Sales minus gross profit. This is indirect way, students. This is not direct way. This is indirect way. Sales minus gross profit. Okay. So if you know all this information means what? Opening stock, purchases, direct expenses, sales, and gross profit. 5 information. Opening stock, purchase, direct expense, sales, and gross profit. You can calculate closing stock as on the date of fire under indirect method. Is it clear, students? The above equation, you can convert it into statement. What is the statement, sir? What is the requirement? The requirement is closing stock as on the date of fire. Same will be the heading. Computation of closing stock. Computation of closing stock as on the date of fire. So what is the first item? Opening stock. Opening stock plus purchases. Second item plus direct expenses. Total. Minus COGS. How do we calculate COGS? Tell me. Sales minus gross profit. We get the closing stock. That's it. Calculation completed. From this closing stock, we deduct any stock salvaged. Then we get the net amount of stock lost. Then we apply some average class, all those things later. First, try to understand the basic idea behind calculation of closing stock. How to calculate closing stock? Okay. Now, the same information we can also present in a trading account. Na? Same information we can also present in a trading account format. If you observe the trading account, visualize the trading account. In trading account credit side, we have closing stock. Na? Yes, sir. Generally, the balancing figure in the trading account is what? Suppose here it is a trading account. The balancing figure in the trading account is what? Either gross profit or gross loss. But now, if you prepare the trading account, with this information, if you prepare the trading account, already we have opening stock, purchases, direct expenses, gross profit also we have, credit side sales we have. The balancing figure in trading account is nothing but what now? Closing stock. Balancing figure is what? Closing stock. So, as on the date of fire, what we do is instead of preparing trading account, we prepare memorandum trading account. Generally, trading account is prepared only at the end of the year. Yes, sir. But here, the middle of the year, we are preparing an account. The middle of the year, we are preparing an account to ascertain closing stock. And this account is called memorandum trading account. Or else, you can also calculate closing stock by preparing this statement. This is what equation. This is what statement. And this is what memorandum trading account. This is what memorandum trading account. Observe carefully. Memorandum trading account. First we write opening stock. Next purchases, direct expenses, sales. If you know gross profit now, then this gross profit is on the sales we apply the gross profit rate, and here we get the gross profit. And the balancing figure in the memorandum trading account is closing stock, and this is the stock as on the date of fire. This is the stock there in the business as on the date of fire. Is it clear or not? Yes or no, students? But here the problem comes. Gross profit rate. Sometimes the gross profit rate is given in the problem itself. Sometimes the gross profit rate is given in the problem itself. Sometimes they don't give you. Then what, sir? How, sir? Then we calculate gross profit rate of previous year. I repeat. If gross profit rate is given, then apply straight away this gross profit rate on sales. If gross profit rate is not given, then try to calculate gross profit rate. How, sir? By preparing previous year trading account. By preparing previous year trading account 2023-24. This is which year? 2024-25. If gross profit is not given now, then go to 2023-24 previous year trading account. From there, you calculate gross profit rate. Sir, what is the formula for calculation of gross profit rate, sir? Gross profit divided by sales into 100. The gross profit rate. Yes, sir. So here GP rate is calculated. Then apply the same GP rate to 2024-25. Is this logic clear? I repeat, observe. First, we prepare memorandum trading account for 24-25. Opening stock we write, close purchases we write, direct expense we write, sales we write. But the balancing figure in the memorandum trading account is nothing but loss of stock, that is closing stock. To know this, we should know first gross profit. Gross profit is nothing but as a percentage. We calculate generally gross profit as a percentage of sales. Gross profit rate is not given, then go to previous year trading account. Go to previous year trading account. From there you calculate gross profit rate. So for that, we have to prepare previous year trading account. Previous year trading account is prepared with the previous year data. Previous year trading account is prepared with the previous year data. Try to observe. Is it clear, students? Right. Observe carefully. So first we prepare memorandum trading account. If gross profit rate is not given, then we prepare previous year trading account for the purpose of calculation of gross profit rate. That gross profit rate is applied here. Okay. Second, amount of stock lost. Total stock as on the date of fire. Stock as on the date of fire minus stock salvaged. And whatever the amount we have, that is called net amount of stock lost. Net amount of stock lost. Suppose as on the date of fire, we have 1 lakh rupees stock. Stock salvaged is 90,000. Means how much stock lost? 90,000 rupees worth of stock lost. Second step. Now we calculate amount of claim. Amount of claim. To calculate amount of claim, we compare stock as on the date of fire. Stock as on the date of fire is compared with the policy amount. To the policy amount. The policy amount. Observe carefully. Here, most of the students will get confusion whether average clause is applied or not. Observe. Stock as on the date of fire is compared with the policy amount. How, sir? Let us say, for example, stock as on the date of fire is 1 lakh. Stock as on the date of fire is 1 lakh. Whereas the policy amount is nothing but 70,000. The policy amount is nothing but 70,000. Means what? Actually, you have 1 lakh rupees stock in the business, but you have taken policy only for 70,000 amount. Now it is called underinsured. The situation of underinsurance. I repeat. Actually, how much stock you have in the business? 1 lakh. But you have taken policy for how much amount? 70,000. Actually, when you have 1 lakh rupee stock in the business, so you should take 1 lakh rupee policy. But whereas you have taken only for 70,000 policy, means here we have underinsurance. When it is a situation of underinsurance, then average clause is applicable. Average clause is applicable. Very, very important. Average clause is applicable. Sir, how to apply this average clause, sir? Very simple. Look at net claim. What is the formula first? Net claim into policy value divided by stock as on the date of fire. Suppose let us say, for example, here in our example, what is the stock as on the date of fire? 1 lakh. Stock salvaged how much? 10,000. And what is the net amount of stock lost? 90. Here average clause, how do we apply? 90,000 is the amount lost, amount of goods lost into what is the policy amount? 70,000 only, divided by what is the stock as on the date of fire? 1 lakh. How much amount we are getting here? Tell me. 70,000 divided by 1 lakh into 90,000. So here we get 63,000. You may ask, sir, 70,000 rupees they can pay to us, na sir? No, not possible. Why? Because you have to insure the goods for how much? 1 lakh. but you insured goods for how much? 70,000. Under insurance. Suppose if goods lost 1 lakh and insurance policy is also taken for 1 lakh. I repeat, goods lost 1 lakh, insurance policy also taken for 1 lakh, then here what is the net amount of goods lost? 90. This situation, the insurance company will pay you 90,000 rupees. Straight away 19,000. Up to 1 lakh it will pay you. Up to 1 lakh it will pay you. Suppose stock on the date of fire is 1 lakh 20. Stock on the date of fire is 1 lakh 20. Stock salvaged is 10,000. Now what is the goods lost? 1 lakh 10. But policy is taken for how much? 1 lakh. Policy is taken for how much? 1 lakh. Means again it is under insurance. Again it is under insurance. Actually goods how much? 120. But you have taken policy for how much? 1 lakh. Under insurance again. Most of the situations we have under insurance only. Most of the situations we have under insurance only. Is it clear? So in case of under insurance, the average clause is applicable. This is how we calculate amount of claim. These steps over. Tell me, first step what we do? We calculate memorandum trading account. First one. If gross profit rate is not given, then we prepare trading account as a working note. Trading account as a working note. From there we calculate gross profit rate. Second step, we calculate net amount of claim, net amount of stock lost. Third step, we calculate average amount of claim. For calculation of amount of claim, we apply average clause. Over. There ends the matter. Is it clear, students? So, pause the video. Try to refer the concept once. Concept is very important. After that, we can try to solve the problems. Is it clear, students? Yes, sir. So, observe this. Observe this concept once. Observe this concept once. Then after, we try to solve some problems on this concept. Okay. Yes. Observe illustration 3. Observe illustration 3. Look at X Limited has taken out a fire policy of 1,60,000 covering its stock. What is the policy amount? 1,60,000. If goods lost were less than 1,60,000 now, then the insurance company will pay amount of loss. The goods lost as on the date of fire is more than 1,60,000, then average clause is applicable. Goods lost or loss is more than policy amount, then average clause is applicable. A fire occurred on 31st March 2023. The following particulars are available. Now what we do, as on the date of fire, we prepare memorandum trading account. So this is 2023 now. So 2023 previous year, 2022, sorry, 23 current year, 22 this year. First identify whether it is financial year or calendar year. Look at first. Stock as on 1/4/2022, 30,000. Purchase to the date of fire, 260. Sales to the date of fire, 1,80,000. Carriage inward, 1,600. Commission on purchase to be paid, 2%. Gross profit rate, 50% on cost. Gross profit rate is given. Look at 50% means 1/2 on cost, that is equal to 1/3 on sales. 1/2 on cost is equal to 1/3 on sales. Yes, sir. You are asked to ascertain total loss of stock, amount of claim to be made against the insurance company, assuming that the policy was subject to average clause. Stock salvaged amount to 41,360. Tell me what are the steps we follow. First, we prepare memorandum trading account. Memorandum trading account we prepare. Second, you need not to, actually we should prepare trading account. Actually we should prepare trading account for knowing gross profit. Next we prepare next we calculate gross profit rate. Fourth step, we calculate net amount of stock lost. 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 Next we calculate claim amount. Claim amount. These are the 5 steps for loss of stock. These are the 5 steps we follow for loss of stock problem. Now, out of these 5 steps, tell me which steps are not required. Trading account you need not to prepare for the previous year. Gross profit rate also you need not to calculate. Why sir? Gross profit rate is given now. When gross profit rate is given, what is the necessary of preparing trading account? Not possible. So here, what is the financial year? Tell me. I mean current year 22 to 23. They are following financial year 1st April to 31st March. Clear? That's it. Now what we do? We prepare the memorandum trading account straight away. See, this is the opening stock now. 60,000 is the opening stock. Yes, sir. 60,000 opening stock. Observe carefully. 60,000 is the opening stock. Yes, sir. Next. Purchases 260. Debit. Purchase 260. Debit. Next. Sales to the date of fire. Credit now. Memorandum trading account credit 180. Next. Carriage inward. Carriage inward is direct expense 1600. Memorandum trading account debit 600. Next. Commission on purchase to be paid 2%. See, commission on purchase is also our direct expense. This 2% is applied on purchase. 260 into 2%. 260 into 2%. It comes to 5200 debit. Clear? Next. Gross profit rate is given 50% on cost. 1 by 2 on cost is nothing but 1 by 3 on sales. Sales are 1,80,000. 1,80,000 into 1 by 3, gross profit is 60,000. So here 60,000 is gross profit. Now balance the account, you will get closing stock 2,06,800. And they said 41,000, 41,360 stock salvaged. From the closing stock, you deduct this 41,360. Sir, loss of stock, nothing but 2,06,800 minus 41,360. You'll get 1,65,440. 1,65,440 is the loss of stock actually. Here observe, as on the date of fire, what is the stock? 2,06,800, sir. But whereas, how much is the policy amount? 1,60,000. So loss is loss as on the date of fire. Here we need to compare loss as on the date of fire. I repeat, loss as on the date of fire is more than policy amount. Average clause is applicable. Then how do we calculate, sir? The amount of claim. Write down the formula compulsorily. Amount of claim is equal to loss of stock into policy value divided by stock as on the date of fire. So loss of stock is 165,440. Policy value 160. Goods lost 2,06,800. So what is the net amount of claim? 1,28,000. So very basic problem. Once you understand this very basic problem, now next one, small adjustments to the some concepts. Adjustments to the concepts. That's it. First, try to understand the basic concept. Basic concept. Okay. This is our illustration 3. Observe this problem once again. Observe this problem once again. I hope you understood illustration 3, students. Now come to illustration 4. Come to illustration 4. Observe carefully. A fire occurred in the premises of Sri G. Venkatesh on 1/4/2023 and considerable part of the stock was destroyed. Okay. On what date the fire occurred? 1/4/2023. This is the date of fire occurrence. The stock salvage was 28,000. Sri Venkatesh had taken a fire insurance policy for 17,10,000. Actually, it is not 17,10,000. Make a correction. It is 1,71,000. So here the policy amount is for 1,71,000 rupees. Make a correction. If the loss is more than 1,71,000, then average clause is applicable. If the loss is less than 1,71,000, then average clause is not applicable. Next, to cover the loss of stock by fire. Loss of stock. You are required to ascertain the insurance claim which the company should claim for the insurance company for the loss of stock by fire. The following particulars are available. Try to observe, if gross profit is given, gross profit rate, not gross profit, gross profit rate is given, then you need not to prepare previous year trading account and you need not to calculate gross profit rate. The gross profit rate is not given in the problem, then compulsorily we should prepare previous year trading account and gross profit. Observe purchases for 2022. Here, on what date the goods were lost? 1/4/2023. Means 2023 is the current year, 2022 is the previous year. Means purchases for the year 2022 means it is previous year data. Sales for the year 2022 means it is also previous year data. Purchases from 1/1/23 to 1/4/2023 means current year data. And sales from 1/1/2023 to 1/4/2023 it is also current year, and make a correction, it is not 24 lakhs, it is 2,40,000. It is 2,40,000. Okay. Next, stock on 1/1/2022 means it is opening stock for 2022, previous year data again. Next, stock on 31/12/2022, it is closing stock for previous year, the same time opening stock for current year na. Whatever the stock we have on 31/12/2022, on one hand it is closing stock for 2022 and opening stock for 2023. Do remember. Next, wages paid during 2022 1 lakh means previous year, and wages paid from 1/1/2023 to 1/4/2023, that is not 1 lakh 80. Make a correction, it is 18,000. Make a correction, it is 18,000. So here we have previous year data plus current year data. Previous year data plus current year data. Observe carefully. Previous year data plus current year data. Is it clear, students? Yes, sir. Now observe. 3 Venkatesh had in June 2022. June 2022 means previous year. June 2022 means previous year. Yes, sir. Previous year. Consigned goods worth 50,000. Consigned goods worth 50,000, which unfortunately were lost in an accident. Means in the year 2022 we have sent 50,000 worth of goods on consignment basis. Generally, what is the entry for this transaction? Goods sent on consignment account debit. Sorry, consignment account debit to goods sent on consignment account. Just try to remember consignment chapter. I repeat, what is the entry for this? Consignment account debit to goods sent on consignment account. At the end of the year, the goods sent on consignment account is transferred to either purchase account or trading account. Na? I repeat, the goods sent on consignment account is transferred to either a trading account or purchases account. So, in the year 2022, whatever the goods we have sent on consignment, what is the entry we record for this? Goods sent on consignment account debit to trading account. Goods sent on consignment account debit to trading account, 50,000. Very, very important adjustment. Next, since there was no insurance cover taken, the loss had to be borne by him. Means which loss? Goods sent on consignment loss he has to bear. Okay. Ultimately, this 50,000 finally we debit to P&L account. Previous year P&L account we debit. Now, stock at the end of each year for until the end of calendar year 2021 had been valued at cost less 10%. Very, very important adjustment. Observe carefully. Till the calendar year 2021, he valued stock at cost less 10%. It is a policy of him to value the closing stock as at cost less 10%. So at what value he is valuing the stock? Cost less 10%. Means at 90 rupees he is valuing 100 rupees worth of stock, he is valuing at 90 rupees. Till 2021 means in this information, observe, because of this valuation, which stock will get affected? Which stock will get affected? He said till 2021 means 31/12/2021. Till 2021 means 31/12/2021. 31/12/2021 is nothing but it is related to 1/1/2021. Because 31/12/2021, whatever the closing stock we have, the same will become opening stock on 1/1/2022. Means this 1,44,000 is equal to at what value? 90%. I repeat, this 1,44,000 is at what value? 90%. What we do? We have to make it to 100%. This is 90% now, because they said They valued till 2021. They valued stock at cost less 10%. So 100 minus 10 means 90 rupees. Now this 1,44,000 we have to increase to 100%. How much, sir? 1,44,000 divided by 90%. So how much we are getting here? 1,60,000. This is one important adjustment which we do. 1,60,000. Very, very important adjustment. First one. Next observe. From 2022, it's previous year. However, there was a change in the valuation of closing stock, which was ascertained by adding 10% to its cost. From the year 2022, he changed his policy. What is that? From 2022, what he is doing? He is valuing inventory at cost plus 10%. Means cost 100 plus 10% means 110%. Means at what percent? 110%. Clear, students? Now what we do? Simple. 2022 means which stock will get affected? 2022 means which stock will get affected? Stock on 31/12/2022. Stock on 31/12/2022 will get affected. 2,42,000. This 2,42,000 is at what percent? And 110%. 110%. Make it to 100%. How much we are getting? 2,42,000 divided by 110%. 110% you can calculate. We are getting 2,20,000. This we are getting 2,20,000. Two adjustments are very, very important in this problem. Except this now, nothing is. Three things first. 1, 2, 3. If you can try to understand these three concepts in this problem, nothing in this problem. Very simple. Is it clear, everybody? Yes, sir. Now how do we solve it? Simple. Here I have explained 5 steps now. Memorandum trading account and GP rate working note, net amount of stock and claim. You follow these 5 steps, then problem is completed. First, draw memorandum trading account. Next, working note trading account. After that, GP rate. Now look at how do we solve this. First, purchases for the year 2022. Go to working note. Write down here purchases. 9,38,000 purchases. See? Trading account for the year ended 31/3/2022. Purchases 938 over. Next, for the next information, sales for 2022 11,60,000. This is sales 11,60,000 over. Next, purchases from 1/1/2023 to 1/4/2023. Current year now. So go to memorandum trading account and write down purchases 1,82,000 over. Next, sales 2,40,000. This is not 24 lakh. This is just 2,40,000. Come to here memorandum trading and write down 2,40,000. Next one, stock on 1/1/2022 means opening stock for previous year. 1,60,000 we have to write. Do remember. So 1,60,000. Here I have given clear calculation. Look at 1,44,000 into 100 by 90. 1,60,000. Next, here closing stock we have 2,42,000, but original cost of this 2,42,000 is 2,20,000. 2,20,000. So closing stock is 2,20,000. Same closing stock will become opening stock for the next year. So go to memorandum trading account and write down opening stock 2,20,000. It's also very, very important. Next one, wages paid 1 lakh previous year, 18,000 current year. So previous year trading account, 1 lakh 18,000 current year memorandum trading account. Next, wages over. Consignment goods 50,000 now. So previous year. So this information will get affected by the previous year. So by goods lost in accident, 50,000 rupees. The brackets you can write consigned goods. No issues. Over. That's it. So in the problem, whatever the information they have given, we have considered. First, what we do? Balance trading account. Here you get gross profit 2,32,000. Okay. And from here we calculate gross profit rate. What is the gross profit rate? 20%. What is the gross profit? This is not rupees. This is 20%. 20% is the gross profit rate, and this gross profit rate is applied for memorandum trading account. What is the sales here? 2 lakh 40. 2 lakh 40 into 20%, 48,000 is the gross profit. Now balance this memorandum trading account. Here you are getting 2 lakh 28,000 as goods lost. As on the date of fire, what is the goods amount we have? 2 lakh 28,000, whereas the policy is taken for how much? 1 lakh 71,000. So the loss is more. The loss is more than policy. Then average clause is applicable. So loss of stock is equal to 2 lakh 28,000 is the stock lost minus stock salvaged 28,000. So what is the amount of goods lost? 2 lakhs. So amount of claim now. Amount of claim formula. Because loss of stock is 2 lakhs. Policy value divided by stock as on the date of fire. So finally we request to the insurance company 1.5 lakh. Is it clear everybody? So very simple problem. This document I will share in the Telegram group, students. If you want, you can refer the answers also. This document I will share in the Telegram group. Is it clear, students? Yes, sir. This is our illustration 4. Illustration 3, little bit complicated. Illustration 4. Is it clear? Yes, sir. Now we try to solve the problem of illustration 2. Illustration 2 is little bit complicated again. Observe carefully. Illustration 2. Mr. X godown was destroyed by fire on 1/6/2023. This is the date of fire. When the goods in stock were insured for 60,000, so for 60,000 rupees amount we insured the goods. Following particulars are given. Balance sheet extract as at 31st December 2022. But goods lost were, the fire occurred on 1/6/2023. Here they are giving balance sheet on 31st December 2022. Means they are following calendar year. So 2022 is the previous year, 2023 the current year. Identify this first. So here they have given creditor for goods 20,000, stock including goods held by agent 2,000, 36,000, debtors 70,000. Debtors how much we have? 70,000 we have. Stock how much we have? 36,000 stock we have. Debtors how much we have? 70,000 we have. Is it clear? Here they are giving creditor for goods and debtor. Here incomplete records concept will be applicable. How, sir? In this problem, the beauty is they will not provide you the purchase of goods for the current year, sale of goods for the current year. I repeat, purchase of goods for the current year, no information. Sale of goods for the current year, no information. These two informations we have to calculate from this creditor account and debtor account. Creditor account and debtor account. Clear, everybody? Yes, sir. Now next look at transactions up to 31st May 2023 include, because on 1/6/2023 fire occurred na? Yes, sir. Now look at cash received from debtors. Cash received from debtors. What is the entry we record? Cash account debit to debtors account. This is posted to debtors account credit side. Bad debts written off 3,500. What is the entry for bad debts written off? Bad debts account debit to debtors account. It is posted to credit side of debtors account. Balance as on 31/5/2023. Debtors we have 70,000. Means closing balance of debtors by balance carried down. Creditors we have 30,000. To balance carried down 30,000. Already here we have creditors opening balance by balance brought down 20. Debtors 70,000. To balance brought down 70. Cash paid to creditors. Creditors account debit to cash. Creditors account debit side posting. Discount received 1,000. Entry. Discount received account debit to creditors 1,000. So creditors account debit side. So once we post all these into creditors account and debtors account, our debtors and creditors account will look like this. See? Debtors account, debit side 70,000. Cash received 3,40,000. Bad debts 3,500. Okay. Cash received 340, bad debts 3,500. Then how these two calculations will be done? 340 and 66,500. Wait and see. Next, creditors account observe. Opening balance 20,000. Cash paid 220. Discount received 1,000 rupees. And closing balance is given 30,000. Means during the year, how much how much worth of goods purchased? 2,31,000 worth of goods purchased. Is it clear, students? Now, if you prepare A minute. If you prepare memorandum trading account, the memorandum trading account looks like this. See, in your material, the answer is given in a different manner, but what I am suggesting is you prepare memorandum trading account. Normally, we are habituated to prepare memorandum trading account. Now, how it looks like. Opening stock anyway, we have 36,000 is the opening stock, and purchases 2,31,000. Just now we calculated from creditors account 2,31,000. 2,31,000. Now, one more important calculation is sales. How do we calculate, and profit? How do we calculate? Once we get the sales and profit now, then we can calculate closing stock. Observe carefully. Next information, look at. Next information. Debtors on 31/5/2023 included an amount owing from the agent from sales to date 4,000 less 10% commission and his expenses amounting to 100 means what? The debtors, how much we have? 70,000 worth of debtors we have on 31/5/2023. This includes owing from an agent, owing from the agent of sales. How much? 4,000 is the sales he made, minus 10% his commission. Consignment concept is there now? Yes, sir. So 4,000 worth of goods he sold. Out of that, his commission is 10%, means he will not pay us 400 rupees, and his expenses amounted to 100, means he will not pay more 100 rupees. Then how much net amount we have to receive from him? 3,500. This amount we should not include in the debtors amount. Amount we should not include in the debtors. So what is the final amount we have to receive from the agent? 3,500. Except this, what is our debtors balance closing? 6,500. I repeat, debtors closing balance is not 70. 70,000 includes one of our agent. Amount receivable from agent. How much? 4,000 he sold, minus 10% his commission, 100 rupees his expenses. Means 3,500 rupees you reduce. So what is debtors? Apart from our agent, what is our original debtors? 66,500. This is the debtors closing balance, 66,500. Very, very important. 66,500. Now you balance debtors account, you get sales of 3,40,000, and the same 3,40,000 is taken to the memorandum trading account credit side, 3,40,000. Here everybody. Now the concept comes, how do we calculate gross profit? Gross profit is very, very important calculation. In this problem, this gross profit calculation is very important. Look at how do we calculate? Simple, sir. For that, look at the second point. Sales. What is the total sales made? Can you tell me? What is the total sales made? 3 lakh. 3,40,000 is the total sales made. Observe carefully. 3,40,000 is the total sales made. Look at this adjustment. Sales total for the period include 1,600 for goods which have the selling price reduced by 50%, and also 6,000 reduced by 25%. What is the meaning of this? Actually, we sold goods for 1,600 rupees. We sold goods for 1,600 rupees. But do you know the original selling price of these goods? Original selling price of these goods are selling price reduced by 50%. Means, can you tell me the original price of these goods? 3,200. What is the original price of these goods? 3,200. But we sold the goods for 1,600 rupees. These type of goods are called abnormal goods. These type of goods are called abnormal goods. Try to understand. I repeat, 1,600. We sold goods for 1,600 rupees. But originally, these goods selling price is how much? Reduced to 50%. Originally, we reduced the selling price of these goods by 50%. Means, before reducing the selling price, what is the selling price of these goods? 1,600 divided by 50%. 1,600 divided by 50% means total selling price is 3,200. Total selling price is 3,200. This is one. Next one. And also, we sold goods for 6,000 rupees. We sold goods for 6,000 rupees originally, but but the original selling price is reduced by 20%. But the original selling price is reduced by 20%. Very, very important. Means before reduction of the original selling price, what is the selling value of these goods? 6,000 divided by 25%. Sorry, 1,000. This 6,000 is equal to 75% na, by 75%. 8,000 rupees. I repeat, we sold some goods. Its original selling price is 8,000, but we sold for 6,000. And we sold some other goods. Original price is 3,200, but we sold for 1,600 rupees. These are called abnormal sales. Normal sale of goods. In this point, this is the heart. This problem, na, this is the heart. Observe carefully. Here, so you observe my working note here. You get the working note. Actually, I sold goods for how much? 3,40,000. I sold goods for how much? 3,40,000. Out of these, I am separating the abnormal sales. Look at 1,600 sold, 6,000 sold. Remaining 3,000, 3,32,400. Remaining sales. Remaining sales. Observe the problem. The normal markup is 50% on cost, and except the above, all sales can be assumed to be at the full selling price, except the second point. Remaining all sales were made at this profit margin. 1 by 2 on cost is equal to 1 by 3 on sales. 1 by 2 on cost is equal to 1 by 3 on sales. 1 by 3 on sales is not 1 by 3 on sales is the profit now. Then what is the cost? 2 by 3 is our cost. 1 by 3 on sales now profit. So out of total selling price, 1 by 3 will go for profit. Then 2 by 3 is nothing but cost. Yes, sir. Now the concept comes, how much profit included in this 3,32,400? How much profit included in this 3,32,400? 1 by 3 is profit now. So 1 by 3 how much? 1,10,800. Then 2,21,600 is the cost of goods sold. Yes, sir. And actually this 1,600 rupees goods we sold now. Originally, what is the selling price of these goods? 3,200. Originally, what is the selling price? 3,200. These goods originally selling price 8,000. But we sold at loss now. Sold at for some loss. So what is the cost price? What is the profit here? Profit is 1 by 3. Profit is 1 by 3, 1,067. Cost is how much? 2,133. And 8,000 rupees is the selling price of goods which we sold. But what is the cost? Sorry, profit on that? 1 by 3, 2,667. Then what is the cost of goods sold? 5,333. 5,333. Observe carefully. This working is very, 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 very important. So we sold total goods for 3,40,000. Out of them, we are separating the abnormal sales and normal sales. Abnormal sales are 1,600, 6,000, and normal sales are 3,32,400.